You might not notice it yet, but the way money moves around the world is quietly changing right under our feet. Every bank, every lender, and every major investor is starting to work in ways they haven't before. It is not a crash or a headline you all see on TV. It's a slow, invisible shift that touches trillions of dollars. The rules of lending, borrowing, and even risk are being rewritten by machines and smart programs. These programs watch, analyze, and make decisions faster than any human could ever hope to. Imagine a computer learning how to decide who gets a loan while the world barely notices. The result is that money can flow differently, sometimes faster, sometimes in ways no one expected. Some of the biggest banks in New York, London, and Tokyo are already testing these systems quietly. Even billion-dollar hedge funds are using them to decide where to put or pull out cash. On the surface, it seems normal, even safe, but underneath, the system is changing its heartbeat. For everyday people, it can mean your mortgage, your savings, or your retirement funds react differently. It may feel like nothing has changed, but small shifts can ripple into big surprises. Think of it like a river. The water moves the same, but new channels are forming under the surface. Right now, trillions are being managed by algorithms that no one outside the bank fully understands. That includes people like Jamie Dimon, Warren Buffett, and other leaders who influence trillions in capital. Even when they speak publicly, the machines are already making decisions before anyone can respond. The signals are quiet: small spikes in interest rates, unexpected lending freezes, subtle changes in credit access. They're easy to miss if you only watch headlines or check your bank balance. You, your family, and your savings are all part of this giant system, whether you realize it or not. Right now, trillions of dollars could move in seconds, with humans only seeing the effects after the fact. That's because machines can analyze risks faster than entire teams of human analysts. They can decide who gets a loan, who doesn't, and how much interest to charge instantly. What seems like a normal approval or denial today may actually be a new pattern of risk shaping your life. Imagine your mortgage application being handled not by a bank officer, but by a system reading thousands of data points. It might look fair, but the rules it uses are invisible and constantly changing. This is not just a bank problem. It touches every part of the economy. From local small businesses in Chicago to tech companies in Silicon Valley, money is flowing differently. You might notice it in higher loan costs, slower approvals, or sudden changes in credit card limits. Even savings accounts can behave differently if the algorithms shift where banks invest your money. For investors, it means markets can move faster than usual, sometimes without obvious reason. A stock could fall or rise while human analysts are still trying to understand why. That AS, because trillions of dollars are now moving based on AI and S understanding of risk and opportunity. Some of the biggest players, people like Elon Musk or Jeff Bezos, have investments that interact with these systems every day. That doesn't mean they control the machines. Often they react to the machines' moves themselves. And that's a sign that the old rules no longer fully apply. The way money has been lent, borrowed, and moved for decades is quietly shifting. You may not feel it at the grocery store or when paying bills, but the foundation beneath your money is different. Banks are testing programs that can change rates for hundreds of thousands of loans in minutes. That's faster than any human team could even notice, let alone respond. Some lenders are even letting AI recommend new types of loans we haven't seen before. These new loans can look normal at first, but the patterns and risks are changing behind the scenes. It's not bad or good. It's just a new way the system is learning to operate. Still, every shift carries consequences for the rest of us. If a system suddenly decides a sector is too risky, lending could dry up overnight for people and businesses alike. That could ripple into job losses, higher costs, and slower growth without anyone fully understanding why. Even retirees relying on fixed investments may notice subtle changes in returns. Small variations now can add up over months and years. The key is that this is not a single bank or country problem. It's global. Systems in the US interact with Europe, Asia, and emerging markets instantly. A move in London can shift lending in New York within minutes, sometimes before any human sees it. Governments are watching, but even regulators are often a step behind these fast systems. Some have started updating rules for AI-driven lending, but the system evolves faster than legislation. That means trillions of dollars can move in ways lawmakers cannot immediately control. You might wonder how this affects your daily life. It can show up in higher interest rates for mortgages or car loans, sometimes without clear reason. Credit cards may adjust limits or rewards in subtle ways influenced by these systems. Even personal savings and retirement accounts may be affected indirectly through market moves. That doesn't mean you should panic. It means you should understand the system you rely on. The good news is that these changes can also bring benefits. Loans may become more accessible to people who were previously overlooked. Some businesses may find faster approvals and better terms if the system judges them low risk. But the risk is that the system may misjudge or overreact to small shifts in data. That can amplify stress on companies, markets, and eventually ordinary people like you. One small signal, like a change in lending criteria, can trigger a cascade across the system. That's how trillions of dollars can move almost invisibly, but suddenly. The chain reaction is subtle. An algorithm shifts rates, lenders react, investments adjust, markets respond. Each step feeds the next, and before you know it, the effects reach everyday life. Some sectors may thrive, others may struggle, depending on the algorithm's decisions. This is why it feels different from 2008. The tools are faster, data is deeper, and reactions happen instantly. Back then, humans were slower to respond, giving some warning signs. Today, machines can make decisions while we're still analyzing the news. That's why watching quiet signals is so important. Look for subtle credit freezes, unexpected loan adjustments, or unusual market swings. These are clues the system is learning and shifting patterns. Some may affect you directly, others indirectly through prices, jobs, or market returns. If you pay attention, you can spot changes before they feel disruptive. That awareness is more important than any attempt to predict exact outcomes. Simple steps like understanding your loans, savings, and exposure can help you stay grounded. Being aware doesn't prevent change, but it allows you to adapt calmly. Talk to trusted advisors if you have questions about your accounts or investments. Keep track of what's happening in your local and national economy. Even small awareness can make a difference when trillions are moving globally. Remember, the system isn't broken, it's evolving. Machines are learning, analyzing, and optimizing, not acting out of malice. But the speed and scale are unlike anything humans have seen before. That's why even small movements in loans, markets, or rates are worth noticing. For the first time, ordinary people need to watch not just headlines, but the quiet shifts. You don't have to understand every algorithm, but recognizing patterns matters. This is about understanding how your money fits into a living, breathing global system. The changes are happening now, quietly, but they will shape the next decade. Every decision in lending, borrowing, and investing is part of a chain that touches you. Awareness, calm observation, and understanding can help you navigate it without panic. The future of money is being quietly rewritten, and your part in the system is real and important. Pay attention, stay informed, and remember that the waves beneath the surface can move faster than they seem. As the global lending system shifts, you might not feel it in your daily routine, but the effects are slowly creeping in. Interest rates that once seemed steady can now jump unexpectedly because algorithms see risks humans can spot. Every bank account, mortgage, and loan is now connected to systems that react in real time. This isn't a sudden crash, it's a quiet evolution, like roots spreading under a forest floor you can't see. The signals are subtle. A small pause in a loan approval, a tiny change in credit conditions, a tweak in investment patterns. Most people never notice these signs, but they matter because trillions are moving behind them. Even wealthy investors like Ray Dalio or Cathie Wood rely on these programs to make split-second decisions. They often act faster than humans can respond, which changes the speed at which money flows globally. You might think, this doesn't affect me, but it does, whether it's your savings, retirement, or job security. If banks lend differently, companies borrow differently, and that can ripple into hiring, prices, and growth. The system is connected like a spider web. Tug one strand, and the vibration spreads everywhere. AI-driven lending doesn't stop at big banks. It affects credit unions, online lenders, and even peer-to-peer loans. Your mortgage or personal loan may now be underwritten with data points invisible to human eyes. These machines can scan hundreds of millions of transactions and decide who is claiming low risk or high risk instantly. Sometimes the system may favor people it shouldn't, and sometimes it may penalize people unfairly. That uncertainty creates small cracks in the financial system that, over time, can widen. You've probably noticed rising costs of living even before seeing these changes in lending patterns. This is part of the ripple effect. Small shifts in money availability affect prices, wages, and opportunities. For workers, it might mean slower raises or higher borrowing costs. For savers, it could mean returns that fluctuate more than expected. Retirees may feel this in the value of pensions or investment income. The effects are subtle at first, like ripples in a pond after a stone falls in. Then the ripples intersect, overlap, and sometimes create waves that touch everyone. For the first time, ordinary people must pay attention to signals that once only mattered to bankers. Small shifts in credit availability or interest rates can amplify over time, affecting your budget, loans, and savings. This is the quiet way trillions of dollars move across the global system, faster and more unpredictably than before. Governments try to regulate, but laws and rules often lag behind technological change. Central banks adjust rates, but machines respond faster, sometimes neutralizing intended effects. That can make markets feel strange. Stocks move unexpectedly, bond prices shift, and investments swing. If you watch carefully, patterns emerge, even if they are invisible at first glance. The key is knowing that systems are learning, adapting, and reacting in real time. It's not just big banks. Fintech startups, online lenders, and even some corporate treasuries are now part of this system. Imagine hundreds of trillions of dollars in loans, mortgages, and investments moving through invisible. AI can spot risks humans can't, like subtle shifts in consumer spending, employment trends, or market sentiment. That speed is both a strength and a risk. Fast moves can prevent losses, but they can also create sudden shortages. A machine might decide a sector is risky and pull funding instantly, affecting thousands of businesses and workers. That decision could cascade, causing layoffs, price hikes, or tighter credit, even if humans don't immediately see the cause. You might notice this in smaller ways: slower approvals for a loan, stricter requirements, or shifts in available credit. These small changes are signals of a larger system adjusting quietly. Even Wall Street legends like Michael Bloomberg and Jamie Dimon now track these AI-driven patterns daily. The market moves in milliseconds, influenced by calculations far beyond human speed. That doesn't mean humans are obsolete. It means you have to watch differently. Ordinary news may not reveal these shifts, but small economic data points can hint at what's happening. For example, a small drop in commercial lending could signal larger tightening across industries. Similarly, a sudden jump in consumer credit approvals might indicate a new trend in risk tolerance. Every small signal is part of the chain reaction that could eventually touch your wallet, job, or investments. Some people may benefit: faster loan approvals, easier credit, or better investment opportunities. Others may face new costs or tighter access to money without realizing why. That outcome is just the balancing act. The same system can create opportunity and risk at the same time. The patterns aren't random. They follow rules the machines learn from massive amounts of data. Still, the rules are invisible to most of us, and that's why awareness matters more than ever. Even a small change in lending criteria can cascade, affecting markets, prices, and employment. You might notice higher borrowing costs or slower business growth without understanding the underlying cause. This is different from past crises because the speed and scale of these decisions are unprecedented. In 2008, human decisions dominated. Now, machines dominate, often before humans react. That means early signals are subtle and require attention to catch before effects are felt widely. You might watch for unusual patterns: sudden rate shifts, unexpected lending pauses, or changes in market liquidity. These quiet signs can give you insight into the system's health before problems become obvious. Being aware is more powerful than trying to predict exact outcomes. Even small adjustments like tracking your debt, reviewing your savings, or understanding loan terms matter now. The system reacts globally. A decision in London can instantly affect credit in New York, Sydney, and Frankfurt. The scale is massive. Trillions of dollars are influenced by these AI-driven lending decisions every day. That's why changes may seem invisible at first, but have lasting effects on your finances. Ordinary Americans may feel it through mortgage costs, credit card rates, or small business lending. Retirees may notice changes in dividends, interest, or pension payouts over time. The chain reaction is clear. AI evaluates risk, lenders respond, markets adjust, and your daily life feels the impact. Some steps are positive: more efficient lending, reduced defaults, and faster approvals for qualified borrowers. Some are negative: sudden restrictions, unexpected rate changes, and invisible reallocation of funds. The balance of risk and opportunity is more delicate than most people realize. That's why even small personal actions matter. Understanding your loans, savings, and exposure can help you navigate calmly. Being informed doesn't prevent change, but it allows you to act with clarity and confidence. Governments and regulators are trying to keep up, but technology often moves faster than policy. That's why you should pay attention to quiet signals in credit, lending, and market activity. Subtle trends in approvals, rate adjustments, or investment flows can give clues about larger shifts. You might notice changes in your bank statements, loan notices, or investment summaries. These are not random. They reflect how the global lending system is adapting to AI-driven decision-making. The impact is broad. Businesses, investors, and households are all connected through this invisible web. You may feel it slowly. Borrowing may cost more, savings may fluctuate, and some sectors may face tighter credit. That doesn't mean disaster. It means the system is learning and recalibrating in real time. Recognizing these patterns allows you to plan, adapt, and maintain stability in your finances. Even if you aren't a market expert, paying attention to signals keeps you connected to the system. Small adjustments, like reviewing loan terms or understanding interest rate changes, become powerful tools. Awareness helps you act calmly rather than react to surprises later. Remember, AI-driven lending is not inherently dangerous. It's efficient, fast, and data-driven. But speed and scale introduce new risks that humans need to understand. That's why even ordinary individuals must watch the quiet signals shaping the financial system. Observing patterns in loans, credit, and market shifts is more important than following headlines. Your attention can help you navigate a system moving faster than ever before. Small, informed steps give you a sense of control in a system that often feels unpredictable. The system is evolving, and awareness is your first line of understanding. Every small shift in lending, borrowing, or investment can ripple into your life in surprising ways. That's why noticing subtle changes is not panic, it's preparedness. You can start simply by tracking credit trends, reviewing loan conditions, and watching subtle market moves. Awareness turns invisible changes into actionable insight that helps you stay steady. The global lending system is quietly shifting now, and the choices made today will shape the financial environment you live in tomorrow. The deeper you look into the global lending system, the more you see invisible currents moving money in unexpected ways. These currents aren't random. They're guided by programs that can read risk, predict demand, and adjust funds automatically. Imagine billions of dollars flowing through unseen pipes, sometimes rerouted before anyone notices. That's the reality right now. Machines are making decisions humans used to control. Even iconic investors like Bill Gates, Warren Buffett, and Elon Musk watch these shifts carefully because they affect trillions. What happens quietly in a single bank can ripple across continents in minutes. Small tweaks in lending criteria can affect local businesses, jobs, and everyday expenses without warning. You might see it in slightly higher mortgage payments or stricter personal loan approvals. For someone saving for retirement, these changes could subtly reduce returns over the years. This system is global, so even small decisions in Europe or Asia reach the US fast. AI programs analyze patterns across thousands of markets and millions of accounts, making micro decisions constantly. Those micro decisions accumulate into macro effects that impact ordinary people like you. Some sectors may suddenly get more capital, while others are starved quietly of funding. That can affect which businesses hire, which expand, and which struggle to survive. Even major corporations like Amazon or Apple interact with these systems daily, sometimes reacting rather than leading. The pace is different from anything humans have handled before. Decisions happen faster than regulators can respond. That doesn't mean the system is unsafe, but it does mean the signals are subtle and easy to miss. You might notice them as small shifts in credit card limits or loan interest rates that seem inexplicable. Those are not coincidences. They are early signs of a system recalibrating itself. Understanding these shifts is like watching a tide. The changes are gradual, but their power grows over time. That's why awareness matters more than ever, even if you don't control a single bank or investment. Ordinary Americans are now connected to the system through mortgages, loans, savings, and investments. Each decision a machine makes can ripple outward, affecting your job, your business, or your household budget. The signals to watch are subtle: unusual lending freezes, sudden rate tweaks, or shifts in market behavior. These can indicate broader changes long before headlines catch up. Some of the world's largest hedge funds, including Bridgewater and ARK Invest, rely on these insights daily. That means trillions are influenced by automated decision-making every second. It can create opportunities, faster approvals, more targeted loans, but also risks if the system overreacts. A minor misjudgment in risk can cascade, tightening credit across multiple sectors overnight. You might feel it as higher prices, reduced borrowing options, or slower job growth. For retirees, these shifts may appear as fluctuating returns or lower yields on fixed income investments. The chain reaction is subtle. AI adjusts lending, banks shift funds, markets respond, you feel it indirectly. It's like a hidden domino effect where the first piece is invisible to most observers. The pace of change is faster than during past crises, like 2008, because decisions are automated. Humans cannot keep up with millisecond adjustments that happen billions of times across global markets. That's why watching quiet signals is essential. The system communicates before it acts. Some of those signals are small fluctuations in loan approvals or interest rate spreads. Others are subtle shifts in corporate financing or investment allocations. Ordinary people may notice it first in personal finances, loans, mortgages, or savings accounts. Paying attention doesn't require deep expertise, only awareness of unusual patterns. The benefits are real. AI can make lending more efficient, reduce defaults, and speed up approvals. But the risks are real too: sudden tightening, uneven access to capital, or overreaction to minor market shifts. Even global figures like Jeff Bezos or Mark Zuckerberg are subject to the same invisible forces. Decisions made by AI affect both small startups and trillion-dollar companies. That's why the system is simultaneously a source of efficiency and a potential amplifier of stress. You might see a wave of increased interest rates for home loans while corporate credit remains easy. That discrepancy can affect which sectors thrive and which struggle quietly. Ordinary workers might notice slower hiring or rising costs for small purchases. Investors may see subtle swings in stock or bond prices that are hard to explain without understanding AI-driven lending. That's why quiet observation matters more than trying to predict exact outcomes. Recognizing patterns gives you insight without needing control over the system. You can watch subtle signs in loan approvals, personal account behavior, and market fluctuations. Small actions like checking your loan terms or monitoring savings yields become more important. The global system is faster, smarter, and more interconnected than ever before. What happens in New York or London can reach your neighborhood in minutes through financial flows. Machines can amplify small signals into larger waves that affect jobs, savings, and everyday prices. Awareness gives you the ability to adapt rather than be surprised. Even small changes, like higher loan costs or tighter credit, can have a big impact over time. Some sectors benefit from faster access to capital, like tech startups or green energy projects. Others, like small local businesses, may face sudden challenges if AI shifts risk evaluation. That's why it's important to pay attention without panicking. Understanding your financial situation helps you make calm, measured decisions. Even tracking simple things like interest rates, loan approvals, and market patterns gives perspective. Quiet awareness is more powerful than reacting to headlines alone. You might notice changes in your bank statements, credit card limits, or loan notifications first. Those are the early signs of a global system adapting faster than humans can process. Machines act on risk, opportunity, and data far beyond what humans can see or analyze. That creates efficiency. But it also introduces risks invisible to most people. The challenge is that trillions of dollars can move without public warning. One misjudged signal can ripple across sectors, affecting businesses, workers, and retirees alike. Watching for subtle shifts allows you to understand the system before consequences become personal. Even small adjustments, like reviewing your debts or saving strategy, become significant in this environment. The system is not broken, it's learning, adapting, and operating at a speed humans never experienced. That's why awareness matters more than prediction. Subtle signals like loan freezes, rate changes, or market movements are the clues to watch. Your attention gives you the ability to act calmly rather than react under stress. Ordinary Americans, from retirees to young workers, are part of this interconnected system. AI-driven lending decisions affect businesses, credit markets, and personal finances alike. The speed of decision-making means subtle changes accumulate faster than humans can process. Recognizing these patterns allows you to understand your personal financial exposure. Even a small increase in mortgage rates can have ripple effects on your household budget. A minor change in lending conditions can impact local businesses, which affects employment and prices. Awareness is not panic, it's preparation. Observing quiet signs gives you insight into a system that moves trillions daily. Some sectors may flourish, while others face unexpected stress, even without clear reason. That's why understanding the unseen waves is essential for ordinary people today. It's about knowing how your loans, savings, and investments interact with a global automated system. Even small actions like monitoring account activity, understanding loan terms, and tracking market shifts help you stay grounded. Machines act fast, data is immense, and the pace is relentless. That doesn't mean doom, it means careful observation is more important than ever. Ordinary people have more control than they think when they watch subtle signals calmly. You don't need to understand every algorithm. Recognizing patterns is enough to navigate changes. The system is evolving quietly, and your attention gives you an advantage in staying prepared. Each small signal, from loan adjustments to market shifts, connects to a broader picture of global money flows. The quiet evolution of AI-driven lending is happening now, and understanding it matters for every American, saver, worker, and retiree. As the global lending system continues to evolve, it's becoming clear that no one is fully in control, not even the biggest banks. Machines now make decisions that ripple across continents, affecting businesses, markets, and households alike. Even people like Warren Buffett, Jamie Dimon, and Bill Gates monitor these shifts closely because they influence trillions of dollars. It's not sudden chaos, but a quiet, constant movement that reshapes how money flows in ways most people don't notice. You might see the effects in subtle ways: slightly higher mortgage rates, small changes in loan approvals, or minor fluctuations in savings returns. These are early warnings that the system is learning and adapting, often faster than humans can respond. The speed and scale are unprecedented. Trillions of dollars can move in minutes based on patterns invisible to the human eye. That creates both opportunity and risk, depending on how the system evaluates each sector, company, or individual. Small businesses may suddenly find funding harder to get, while tech giants could see faster approvals for expansion. For workers, it may mean slower raises or hiring freezes in industries the system considers risky. For retirees, returns on investments or pensions may fluctuate unpredictably. Yet the system isn't broken. It's adapting, recalibrating based on massive amounts of real-time data. This is different from past crises because machines react instantly, and humans often only see the effects after they occur. That is why awareness is so important. Watching for subtle signals is the only way to prepare calmly. Signals include shifts in credit availability, changes in interest rates, or adjustments in lending terms. Even a small tightening of loans can cascade through local businesses, employment, and prices. Ordinary Americans are part of this system whether they realize it or not. Your household budget, mortgage, or savings account interacts with global capital flows daily. You might notice minor disruptions first, like delayed loan approvals or small rate increases. Those are the first signs of a larger pattern, invisible to most observers. The chain reaction works like this. AI evaluates risk, lenders respond, investments shift, markets adjust, and households feel the impact. No single person controls all these moves. It's a system of interlinked decisions happening at high speed. Even investors like Cathie Wood, Ray Dalio, and Elon Musk watch these subtle signals to guide their strategies. They are part of the system, not outside it, and their moves can amplify or react to AI-driven trends. This is why small changes matter for ordinary people. Minor fluctuations today can compound over months and years. Awareness doesn't prevent change, but it allows you to act with clarity rather than panic. Simple steps, like reviewing loan terms, tracking credit, and understanding savings exposure, can make a difference. You don't need to predict the market, only notice patterns and act calmly. The system is global. Decisions in London, Tokyo, or Frankfurt can affect your neighborhood bank accounts within minutes. That interconnectedness is powerful, but also means changes can reach you silently and quickly. Machines are now faster than humans, and that changes the way money flows at every level. Some sectors will benefit, others may face tighter credit, and the effects can reach households unexpectedly. Ordinary workers might feel slower hiring, reduced bonuses, or higher costs without clear reason. Retirees could see returns fluctuate in ways that seem unrelated to personal decisions. That's because the system reacts to patterns across millions of accounts, not just individual actions. Understanding these invisible currents is essential to stay prepared and calm. You don't need to master AI. You need to recognize how shifts in lending and credit can affect your life. The first sign may be a small increase in interest rates, a subtle change in loan terms, or unusual market behavior. Each signal is part of a larger picture, one that affects the economy, businesses, and households simultaneously. Awareness gives you perspective to make calm, informed choices rather than react under stress. The benefits of the system are real: faster approvals, reduced defaults, and efficient capital allocation. But the risks are real too. Sudden tightening, overreaction, or uneven access to funding can ripple across sectors. Even global giants like Jeff Bezos, Bill Gates, and Mark Zuckerberg are subject to these invisible forces. Their decisions interact with the same AI-driven flows that affect small businesses and local families. That is why understanding the system isn't just for investors. It asks for anyone who earns, borrows, or saves money. A single algorithm's decision can influence hiring, wages, prices, and investment returns without anyone noticing. That makes paying attention to subtle signals more important than following headlines alone. Quietly, trillions of dollars move through the system daily, guided by AI and programs humans only partly understand. The pace is relentless. Milliseconds matter, and the cumulative effects reach ordinary people quickly. That's why small personal actions matter now. Tracking loans, checking interest rates, and reviewing accounts become essential. Awareness is not panic. It's preparation for a system moving faster than ever before. Even small adjustments in household spending, saving strategy, or debt management give you more stability. You can't control global lending, but you can control how you respond to subtle changes. Watching patterns in credit availability, loan terms, and market shifts gives insight into unseen forces. Ordinary Americans are more connected to this system than ever through mortgages, credit cards, and investments. Every small decision by a machine can ripple outward to affect your daily life. The quiet signals are often the most important. Subtle shifts in approvals, lending limits, or rate spreads. Machines make fast, data-driven decisions that humans once made slowly, and those decisions cascade instantly. Even small, unnoticed changes today can have lasting effects on savings, jobs, or investments tomorrow. That's why paying attention calmly is more powerful than trying to react later. The system is evolving, and ordinary people can't ignore it without risk. Simple awareness, tracking loans, monitoring accounts, understanding market moves, helps you navigate uncertainty. The AI-driven system isn't malicious. It's efficient, learning, and reacting at incredible speed. But the speed and scale introduce new risks that are invisible without careful observation. Even subtle shifts in credit, lending, or rates can ripple through local economies and household budgets. Ordinary Americans need to understand these invisible forces to protect their financial stability. A single signal, like a loan freeze or rate adjustment, can cascade across markets and businesses. That's why patterns, not predictions, are the key to staying prepared. You can't control the global system, but you can act calmly with awareness and knowledge. Even small steps, reviewing debt, checking savings, tracking interest, give a sense of control. Machines and AI will continue to shape lending, borrowing, and investment decisions faster than humans can react. The pace and interconnectedness are unlike anything seen in past crises, like 2008. Subtle changes accumulate and ripple outward, affecting households, businesses, and markets simultaneously. That makes attention to detail more important than ever for ordinary people. You don't need to understand every calculation. Noticing patterns and signals is enough. Quiet observation allows you to respond calmly rather than being surprised by sudden changes. Even minor changes in loan approvals or market activity can cascade into significant impacts. Ordinary Americans can gain an advantage by simply staying aware and informed. Awareness lets you act thoughtfully rather than react under pressure. The system is learning, adapting, and optimizing, and your household is part of that ecosystem. Even subtle changes in lending behavior, credit flow, or investment patterns eventually touch your daily life. Paying attention is not panic. It's preparation for a fast-moving, interconnected financial world. Awareness allows ordinary people to see trends before they become disruptive. You can start simply, track loans, check savings yields, and notice unusual rate changes. These small steps help you navigate the invisible waves of the global financial system. AI-driven lending affects both large corporations and local households alike. Machines now act faster than humans, shifting trillions quietly but decisively. Even small unnoticed adjustments in one sector can ripple into your budget, investments, or retirement plans. Observing patterns gives perspective and helps you act calmly. Ordinary people have more influence over their response than they realize. Awareness of subtle signals transforms uncertainty into understanding. The global lending system is quietly evolving, and trillions of dollars move with barely any human notice. Every shift, every adjustment touches ordinary Americans in hidden ways. Calm observation, informed awareness, and small personal steps help you navigate this invisible system. The system is evolving now, quietly, and those who pay attention have the advantage of understanding before it touches them directly. Have you noticed any changes in your loans, credit, or savings lately? Share your thoughts in the comments. If this helped you understand the changes in the financial system, consider subscribing and sharing with someone who might find it useful.